Let's look at the tape right here, right now. Nokia, ticker NOK, is trading around the $10.60 zone, marking an extraordinary structural re-rating that has quietly doubled investor capital over the trailing periods. Yet if you open up mainstream financial media or scroll through retail sentiment feeds on Reddit and X, the narrative you encounter is hopelessly stuck in the past. To the average retail investor tracking daily price action on Robinhood or Webull, Nokia is still pigeonholed as that nostalgic legacy Finnish handset maker from the early 2000s, or worse, a sluggish, low-growth European telecom equipment provider weighed down by stagnant carrier spending on traditional 5G cell towers. That lazy consensus is not just wrong, it is a multi-billion-dollar market mispricing. While the retail crowd chases hype cycles in high-beta meme stocks or hyper-dilutive microcaps, institutional heavyweights have been quietly executing a massive structural accumulation phase. They understand a fundamental physical reality that standard financial journalism completely misses. The modern artificial intelligence supercycle is choking on its own data. Hyperscalers like Microsoft, Alphabet, Amazon, and Meta are pouring hundreds of billions of dollars into sprawling data center clusters packed with high-end GPUs. But silicon compute power is completely useless if the data cannot move between servers at the speed of light without thermal degradation, packet loss, or catastrophic latency bottlenecks. The real bottleneck in AI today isn't just wafer fabrication, it's optical interconnects, high-capacity IP routing, and deterministic data center fabric. And that is precisely where Nokia has quietly transformed itself into an indispensable infrastructural gatekeeper. Market dynamics and institutional positioning. Take a close look at the institutional volume profile beneath the surface of Nokia's daily trading ranges. Every single time macro jitters or transitory carrier spending cuts cause a knee-jerk retail sell-off, institutional blocks step in to absorb the float. While retail investors panic over short-term headline noise regarding European macroeconomic growth or legacy carrier headwinds, smart money is laser-focused on the underlying order intake. We are talking about eye-watering numbers, AI and cloud-related order intake surging past multi-billion euro milestones, with AI-driven customer revenue doubling year over year. The institutional playbook here is classic accumulation by stealth. They are buying the transformation before the broader index fund allocators are forced to re-weight their portfolios to reflect Nokia's true identity as a high-margin data center infrastructure play. Pause for a second and look at your own portfolio. How are you positioned in the hardware layer powering the AI transition? Are you heavily concentrated in expensive, overhyped front-end chip makers while ignoring the plumbing that connects the entire ecosystem? Or are you scaling into infrastructure plays during quiet market pullbacks? Drop your strategy in the comments below and let's break down the mechanics. Business model and historical context. To understand why this institutional accumulation is happening, you have to strip away the outdated historical framing. For decades, Wall Street categorized Nokia through the lens of mobile handset nostalgia and cyclical carrier capital expenditure cycles. When mobile network operators slowed down their 4G or initial 5G macro tower deployments, Nokia's stock would get hammered in tandem. That old operational model is effectively dead. Following a sweeping internal restructuring, Nokia has consolidated its engine room into two powerhouse segments, network infrastructure and mobile infrastructure, along with a high-value technology licensing framework. The crown jewel of this transformation is the Network Infrastructure division, encompassing optical networks and IP networks. This is not your grandfather's copper wire telecom business. Nokia's advanced coherent routing and optical transport solutions are the structural arteries carrying data across hyperscale cloud environments. When a cluster of advanced chips processes massive large language model workloads, the optical interconnects and IP routers built by Nokia are what allow petabytes of data to move seamlessly across distributed data centers without bottlenecking. By diversifying away from pure-play mobile base stations and shifting its revenue mix towards cloud providers and AI data center operators, Nokia has fundamentally altered its financial profile. Gross margins are expanding, free cash flow conversion is strengthening, and the company is sitting on a rock-solid net cash balance sheet of roughly 3.8 billion euros. Looking out over a multi-year horizon, the growth catalysts for Nokia are locked into place. The integration of advanced strategic acquisitions, such as Infinera, cements Nokia's dominance in optical semiconductor packaging and coherent optical networking, positioning them shoulder to shoulder with global optical giants. Furthermore, the launch of pioneering commercial platforms like their AI RAN architecture proves that Nokia isn't just reacting to the AI era, they're actively architecting it, unlocking over 100% spectral efficiency gains and offering a seamless software upgrade path into 6G. Of course, no thesis is complete without a rigorous examination of the downside risks. Supply chain constraints for specialized optical components remain a persistent bottleneck across the industry. Geopolitical friction points can disrupt international deployment schedules, and any unexpected structural slowdown in mega-cap tech capital expenditure budgets could temporarily cool order momentum. Moreover, executing complex corporate restructurings always carries short-term cash outflow and friction risks. Yet when you weigh these operational risks against the broader macroeconomic backdrop, the ultimate takeaway is clear-cut. Short-term price noise, daily sentiment shifts, and retail impatience are completely irrelevant when a foundational technological gatekeeper is rewiring the digital infrastructure of the modern world. The market is transitioning from pricing Nokia as a stagnant telecom relic to valuing it as an essential pillar of the AI age. Look past the noise, focus on the structural reality of the data bottlenecks, and recognize that the real wealth in this cycle is being built at the network layer. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any financial investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.